Good morning from Chicago traders and happy Tuesday. It is 8 a.m. Chicago time on the 21st of June 2022. This is episode number 2256. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A reminder that yesterday was a U.S. federal holiday. We were off, so no trading yesterday, although the futures exchanges were open and trading through till noon central here in Chicago. Today we come back and we see the expected, which is a little pop higher. We'll go over the technicals there. Let's dive right into the convergent trading pre-market summary sheet to look at the lay of the land here and what has changed. A few things to note. We are in a risk-on sentiment today. We're led by the Russell. We see pretty good strength across the board, actually. All of the four major indices in U.S. markets are quite strong, with Europe lagging behind for several reasons. Again, the risk sentiment is on. The key events are that commodity prices have fallen quite a bit. Crude oil's off about $10, $11 from its high, or about 10%. Gold has held steady. Silver has held steady. Copper's come off a little bit. We're seeing crude popping higher today, but again, last week we saw crude falling pretty dramatically, especially on Friday. With POTUS scheduled to meet with the Saudis next month, the expectation is something will be done about these crude prices, and so crude's reacting now. The other thing is there are some signs of consumption/demand falling, some demand destruction, people driving less, housing market slowing down, so taking the pressure off of commodities, and so on and so forth. And we're seeing that across the board right now, some early signs, and that is also creating some price relief, which relieves inflation. This morning we had a few numbers, nothing really major. The Canadian retail sales ex autos came in at 1.3%, much lower than the 1.8% expected. Retail sales month on month were relatively strong, came in at 0.9% versus 0.7%. And then we're expecting existing home sales for May at 10 a.m. Fed's bargain at 11, again, Fed's bargain at 3:30 p.m., and the Bank of Japan monetary policy meeting minutes if you're trading in the evening. Those are the event risks that are ahead of us. Looking at the S&P, and please note right now in this chart in front of you, note the rotations. They have all gone up because of last week's additional volatility. The rotations have increased. The S&P's increased from about 8.25 points as a harmonic to 9.5 points, which means that stops are getting wider, so are targets. The NASDAQ has jumped up as well from about 31 points to 34 points. The Russell jumped up from about 4.6 points to 5.2 points, and so on and so forth. It's same with crude. So observe the harmonic rotations, very important. And also the ranges have gone up slightly as well. The S&P jumped from 71 to 74 points on the daily range. Turning our attention to the S&P, I'm sure all of you have heard about what's going on with crypto and Bitcoin and Ether. Very strong moves down. Those who have followed me on Twitter saw that I've been posting since the end of November the strong potential for a sell-off in these products, with 22 being the key target below, key support below, and it broke through there. Of course, taking a beating in my super small crypto holdings, but that's, I'm not, this is just kind of, I don't call it gambling money, but it's just to have a stake in crypto. Um, the S&P is in a multi-distribution profile that is actually becoming more and more balanced. The S&P is traded 197,000 contracts. I want to remind you that, in case you didn't know this, technically, we are still trading the entire time since Sunday's open until now. We are in Tuesday's session. So technically, according to the exchange, we are trading in Tuesday's session. So from Sunday at 5 p.m. Central, 6 p.m. Eastern, the open, until now, this is considered one session for settlement and for clearing purposes, margin purposes. However, I remove everything that happened between 5 p.m. Central on Sunday until the market closed at noon Monday. All of that is removed from my data. Unfortunately, I still need to figure out how to do that on Edge Pro X. But on my IRT charts, I don't consider that data. So when you're looking at the volume here, it is devoid of the volume that occurred yesterday during the holiday. I just removed the holiday trading as if it never happened because we are in Tuesday's session. I'm only looking at Monday from 5 p.m. Central, 6 p.m. Eastern until the present to describe the overnight status and the overnight action. Currently, 198,000 contracts have traded. The market has popped higher. The S&P has broken through the 37.1175 key level. And as I noted in yesterday's homework for Convergent members, I stated that the ES took out the 37.1175 zone, is holding above in current Globex session. This may lead into Tuesday's session having a strong buying bias, as there are many indications that equities are a bit oversold cheap at this point. We'll see. We'll follow price, but the one-time framing down in the S&P has been breached, and that's correct. We did end up popping up, popping higher in the overnight session. We are about 75 points above Friday's settlement. Friday's settlement being around 36.75, and the high is 37.49. Again, about 75 points higher. So pretty strong there. Currently, the S&P is up 56.5 points, and 100% of the inventory is long. In other words, 100% of the volume that has traded today is above the prior close and prior settlement. The range is 38.5 points, which is pretty modest. The point of control shifted up to 37.34.5 on the S&P. So that's what we've got. Let's move ahead with our review. I'm going to start out today by looking at the bigger picture. So we held this balance last week for a few days. We had already broken from balance up here. If you recall, the number was around 71. Up here, 39.71. We broke through. We moved into balance last week, Monday, Tuesday, Wednesday. And then we broke down on Wednesday night, Thursday morning out of this balance. Then what did we do? We came back and we tested that balance from below. See this? And this. Right? So now we have a clear box right in here. In fact, I'm going to draw the box like this. Okay? So this is your current box, and we are back above this box. So what does this mean? Why don't we do a little pop quiz here this morning? And I'm going to ask you, what does this mean as we pop in out of the lower box into the higher box? What are we aiming for here? Take a look at this chart in front of you. What do you think is going to be the key test area now? It's highlighted a little bit for you, but I'm going to give you a hint here. First, 37.40. which is the microcomposite point of control for these 3 days, is 37.40. Then we're looking at the next key acceptance area right up here at 37.77, somewhere around there. This high volume right here. These are the two key areas. 40, which we've already tested. We went to 37.49 in the overnight session, but of course we'd want to see that in the day session rather than just in the overnight session. But essentially what we expect the market to do is to come back and retest the balance in this area. So again, we are moving from here, we've moved into balance down here, and now we've popped higher. We're trading around 37.34, so we're looking for it to come up into this area here, 37.75, 37.77, whatever you want to call it. That's the next key area to test. Yes, I can sit here and do, a fib from the high to the low and figure out the 50% and a 38.2 and a 60 something. But let's talk auction, because the auction is real. It's not mathematical. We move from balance to imbalance. This is your imbalance here, to balance, to imbalance, to balance, to imbalance, to balance, and to imbalance, to balance. So those, if you are, for those of you who trade auctions, these would be, your strike prices that you would trade, and these would be the necklines, the imbalance points, the low volume nodes become your warning that if it's taken and continue and it holds, that your strike might be in the money. For example, if you're an option writer, this is not a recommendation to trade options, but just to give you an idea, it really, the market generally moves from balance. Balance is really important. It's really important to understand where balance is, because the entire purpose of the market is to get as many people to trade with each other as possible. The marketplace is a place where interested buyers and interested sellers meet. So if you don't consider balance and imbalance in your trading, you're really missing the point, in my opinion. And in general, you're likely not a strong hand in the market. You're likely a relatively weak hand, and you're responding to very short-term triggers. So if you understand balance and imbalance, you would understand that overall the market moves away. It trades the heck out of an area, then it moves away, and in general it finds its balance again. The market does have memory, despite what many people talk about and say that there's the Brownian motion, random walk, and so on. Yes, that is in individual prices and individual trades, but in general the market has a mission and it has a memory. And the reason the market might have memory, my speculation is because people hold positions from prior failed areas, and then those positions come into the money, and so on and so forth. And so we see a reaction at those levels, right? So that's the overall picture. So this is the big picture. We're moving away from the balance that we've had here. We have really traded the living bejesus out of this, and we could see that we had a double top or a weak high. A double top to people who are price action based is considered a strong resistance. A double top to people who follow the auction, consider that a weak high. And the reason is that if the market moves to a price and that price is just too expensive, the market moves away from that price. And generally, the profile is very thin in that area. There's no interest in those prices, and so it moves away. We call that an excess high. But if the market moves up to a price, then it comes back and it moves up to that price again, this means that this price was not an excess and it had enough interest to come back to that price. This makes this a weak high, and it is a high probability that this will break. So when we look at double tops and double bottoms at the initial balance being the first hour trading, there are some statistics that I have worked out painfully using Excel. There were some statistics that I have worked out that show, and past performance is not necessarily indicative of future results, that show, for example, a double top at the IB is very likely to break 82% historically. The double top at the IB high was broken by the end of the session. A double bottom at the initial balance historically has been broken 83% of the days in the sample size, and the sample size was 10 years by the end of the session. So you can see a double top at the IB high has an 18%, has had an 18% probability, historical probability of remaining by the end of the session. And at the bottom, it's had a 17% historical probability. So you can see that double tops, double bottoms aren't really support and aren't really resistance. That's my argument. The same thing at the high of the day. The high of the day probabilities dropped to something like 78% historical probability that a double top at the high of the day will remain by the end of the day. And then 76% for the high and 78% for the low. So with that, the point being, when we saw that we had this double top here between Thursday and Friday, this is a very early indication. And look at where it's settled, right on top of each other. The point of control and value area shifted higher over Thursday, further indication that they're not accepting lower prices. And having a double top like this is very, very indicative. If I was a swing trader, I'd be looking to get long into Friday close, or I'd be looking to get long on the open of the futures market into today's session. And so seeing that we have a double top and having value move higher, having sold off, having balance above us, these, balance acting as a magnet. Remember, 3740 is our magnet for this session. These are all indications of a high probability long coming into today's session. And that's what I talked about in the Convergent Trading Head Trader channel last night as I was doing my homework or sharing my homework. And that's what we're seeing in this morning's play. So I'm setting up the parameters of why, it's after the fact now, but why I've been bullish coming into today's session. Now, with that being said, looking at the intraday, so here you have it. You have the magnet 3740, the magnet being the multi-day point of control from Monday, Tuesday, Wednesday, last week's balance, Monday, Tuesday, Wednesday, combined together. If we look at the RTH volume of those combined days, we'll find that the point of control of those 3 days is 3740. That's where the market stalled today. Of course, we pushed to the mid-century, which is at 3750. Our overnight high is 3749. But the magnet's 3740. So this morning we're opening in a gap. We are gapping through a gap zone. We still have a gap zone from last week from the 16th. And we're gapping through it. So I'm expecting pretty stable, pretty solid support beneath us. We had a small double top right here in the 34 area last week on Thursday night, and we're pulling into it. So you can see that we busted out, we pulled back, we went to the magnet, and then pulled all the way back, and now we've pulled back to this initial high and holding. So we are holding at the overnight point of control. We're holding at the full session mid and the full session VWAP, coming out of balance into a greater balance, and we're against the magnet. Raise your hand if you're completely confused and lost by what I just said. It's very technical, but it's a culmination of all the pieces that we have coming into today's session. So as we come into today's session, we've popped up, we've pulled back to the high that was put in yesterday, which is meaningless really. Then we popped right into the 3740 magnet, 3740 magnet right here. See that? There's a blow off top. You can see there's a huge big lot print there. This is a blow off. Somebody stopped, got taken there, and it stalled at 3740. There was an offer at 3740 that held, and then it pulled back to where it pulled back to where it started today's session, right in here. Okay, so this is the beginning of today's session. Where it started today's session, it pushed higher and it pulled back again, and it's holding in the middle. So now it's sitting on top of the point of control, the overnight point of control, the full session VWAP, and the full session mid. So what does that say? What does that say in today's action? Today's action is relatively bullish. However, as we open this morning, we are opening in a balanced, we're opening up against the magnet, and we are opening against the VWAP mid and the overnight point of control. So despite the fact that the market has vigorously pushed up, it is likely to be a back and forth two-way open. That's what that means. And so what does that mean to us as traders trading this? What this means is that we have to wait. This is one of those mornings where you have to wait and see which side prevails. And the way we know that is either we open up here at the 33 against the overnight point of control, which is just above like 37.35 or so. We either see that we are responsive selling. In other words, sellers come in and bring price back down to that 37.11 right down here, this area here, this high double top. You know, this is expected to be a pretty formidable support for now. It used to be a double top. It is likely to be support now. We're either going to see responsive selling that brings us down to retest this, which is the natural thing to do. The market's popping higher. The participants are going to respond by selling it or taking profits on the longs, partial profits at least, or hedging a short position right away. And then, or hedging a long position right away, just basically securing some profits off the table. Or we're going to open, chop, 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 and then we're going to break higher and move away from this magnet, 3740. So we are trapped between mid-century at 3750, 3740 being the magnet, 3735 being the overnight point of control, 3730 being the full session mid. This is a messy area. So we want to see if the market moves away and moves strong or if it chops around. So my hands are going to be off the mouse early on unless we see a quick test and a strong impulse, and I'll trade the pullback of that impulse, be it long or short. Okay. If we trade short, let's take a look at this for a second. I'm going to switch to the review screen here to give you an idea of what this looks like. Let's zoom in. Okay, so here's where the 3740 comes from. So see this point of control? For these 3 days, if I take just these 3 days, which are 3 days of balance, and then you have 2 days of balance, for just the 3 days, the point of control is 3740, this black line. You can't see it, but there it is, 3740. See that? 3740 right here. That's the balance. That's the high volume for the last 3 days. If we don't hold that, so let's get rid of that. If we don't hold that, and you can see for the week, we have a double distribution profile. Double distribution profile. We have balance up, balance down, and we are now opening at 37.35. So we are in the upper distribution. So the expectation is this is likely to be strong support. if it pulls back. The ideal trade, in fact, today is that it just fails to push higher, it moves lower very quickly, and it fights at 37.11, maybe pushes into 10.09, and it starts to turn up. Then we look that it's holding. We take the long defining risk below the swing low and look for it to push back to 37.40. That's what we're looking for. So if it does not, if it pushes through the 37.11, this is really important. If it pushes through the 37.11 and it continues to be offered, in other words, it is not able to lift, it is just really weak, then your target is what? What is the target from an auction perspective? If it pushes through the 37.11 and it remains offered, what is your target? Just look at the screen. It's right there. What becomes your target? What is the next balance? 36.75. That becomes the next balance. That is the most accepted price of the session. So we've already tested the 40, and this is a multi-distribution price here up here. We have a 40. We have the 37.77, also a high volume node. But if we push the 37.11 this morning and remain offered, 36.75 becomes your target. If we try to pull back and push through the 40, pull back and start to move higher, then we're looking for that 37.77 area as the next key target. And those are the big trades of the day. Those are the trades that I'm looking for. The next area up will be 3,800 and 38.09. 38.09 being the prior low. The prior low on a continuous contract back adjusted basis. 38.09 becomes the key target. Once 38.09 goes, then 38.43 becomes the clean test up above. That's your plan for the day. I know there's a lot to digest here. I recommend you watch this video again. I just gave you volume profiling in a nutshell. Good luck today, and I'll catch you tomorrow morning. Take care.